Welcome to the Salty Investors. This is episode number 7, not that we're counting. And how are you this week, Tim?
Brilliant. How about yourself?
Oh, can't complain, but I will anyway. I might kick off with the salt myself this week. Um, this is an Australian sort of issue, I'd say, which is that right now the new Labor government's just delivered their budget for the next year and the out years. And everybody's going ballistic about how terrible it is. And there's a big black hole, too much debt. They promised they were going to, cut our electricity bills, which, I mean, they probably will cut our electricity bills after they go up 200%, 300%.
Yeah.
But, what I'm salty about is the level of debate. So, of course, if you're on the right, you think the Labor government's hopeless, they're useless, they can't run a budget, they can't bring down energy prices, they can't do anything about inflation. If you're a Labor voter, your answer is, but the Liberal Party ran up all this debt under their watch. Now, I don't agree with any of these. It's, if the Labor government had been in during COVID, do you think they would have spent any less money and threw less money at people? No, they wouldn't have. We'd be in the same situation. They're both a bunch of idiots. Neither of them have any solutions. And this stupid left, right, the Liberals are shit. No, Labor's shit. Yeah, it's just depressing, that level of debate.
Yep. Yeah. Oh, I can't really add to that. Same book there, but yeah, I don't know. It just seems to be going around in circles. I don't think it was too bad of a budget, to be honest. It didn't go crazy spending a whole heap. He did some, little stuff around the edges, but you got to expect that. Both sides would have done it.
Yeah.
So I think, not too bad. He's stuck in a corner. I'm sort of liking the guy more, but
I don't mind the fact that he's a little bit more, well, I think he's at least semi-honest about the predicament, that we don't have all the solutions. We can't fix, they made election promises, which they all do, which now they have to break. But I don't mind the fact that he's sort of, it's not that much we can do about inflation, really. And that's the thing. It's what I think about our society, is that we're trained to believe that politicians have the solutions, which any objective analysis of the way governments run would suggest that they don't. And so why are you expecting them to solve inflation or whatever else? They can't. They can't. All right. Enough about our crappy government. What about your salt for this week?
I'm a little bit salty about a few long-term investors. I keep getting told, retail crowd is a bit too short-term thinking, but I see guys like Bill Ackman or Mohnish Pabrai, just changing their mind, and flipping on investments. And these guys are professionals, been around for freaking decades, and all of a sudden they're flipping on ideas that they're supposed to have done deep thinking on. And you're thinking, the retail crowd cops a bit of flack for this sort of stuff, but it obviously doesn't happen in the professional world. So I'm just a little bit salty.
What's he flip-flopping on? What's Ackman flip-flopped on?
Oh, Netflix is the one that got me. Wrote this huge Bible on why it's such a great company, and then a couple of months later he's dropping the whole bag. And you just don't do.
Did we talk about this? Did we talk about him? Maybe we talked about it offline, where I said to you that he is tweeting up a storm on a daily basis about the Ukraine war. It's almost like he's just forgotten what his day job is, and he's now opining about, I don't know, it's like a distraction for him. It's just doesn't make, it's weird. It's funny to watch.
Oh yeah, it's just it's a hard job being a fund manager, trying to keep on track and trying to think long term and not taking the latest fad, but if he's all into the Ukraine war, that's obviously not going to be around in 10 years, hopefully not.
Well, touch wood.
So, but is he really looking out for his investors here, keeping on the ball here, and markets are dropped. You're supposed to be thinking about what are you going to be buying, and if he's worrying about the war, I don't think that's too helpful. But
Or old Bill, maybe he's lost the plot. I don't know. We'll see. So interesting piece of data out in Australia. Was it yesterday or the day before? Inflation is now above 7%. It's so I think we said many podcasts ago, although we've only done 7, so it's not that many, but that Australia's lagging, like that our inflation was still headed up, whilst the US looks at least to have flattened out, not if not outright rolled over yet. But so this, I don't think, was a surprise to either of us that this happened. But obviously we are back to 1990 is the last time
Yeah.
we had inflation this high. So
Wow.
I was in high school the last time
Mm.
we got inflation this high. And I mean, full credit to you for saying at the last RBA rate rise, where they only raised 25 basis points, you said, now they're going to look silly if they need to go 50. Now, my view is they won't, because they want to retain what little credibility they have left, and they will stick to this incremental 25 basis points. But now you're in the situation where last month you had just over 6% inflation with a 2.6% cash rate. And now, if they do 25 next month, you've got a 2.85% cash rate with inflation over 7%. So the spread has got even wider. And so this looks kind of silly. Do you want to take a victory lap here?
Oh, yeah. Like, I just, they're supposed to be following the data here, and data's going against them, and they're sitting on their hands. Like,
Yeah.
And it's just got me a little bit frustrated. They should have gone a little bit harder, a little bit earlier. Like, I was kept on getting told by everybody, oh, no, we don't need to go as hard as the US because, the inflation isn't as bad. But look at it now. Like, we've got a 7 handle on it.
Yeah.
I don't know. I'm a bit upset about that. That's all. So I think, we should have gone a little bit harder, a little bit earlier, and maybe we wouldn't be having to do all this incremental pain. What do they reckon? A whole year of rates at 25 they're going to keep doing? So,
well, the thing is, I think if you look at this is the bond market basically. So you've got rate rises through to, say, what's that, about September? They're not. These are bond yields, so they're not perfectly. They don't step up in increments of 25 basis points or anything like that. But so you've basically got rises all the way through to, say, at least mid next year, and then pretty much flat all the way out. I mean, you're not getting a cut, really, pricing in a cut until early 24. Now, why that's interesting, I think, is that prior to this, the market had interest rates going up, sort of topping out mid next year and already dropping by the end of 23. So again, this theme that we've kept harping on, which is that inflation's sticky and going to stick around longer than everybody thought. Even the market's now saying, okay, well, maybe rates don't come down next year. They just sort of stay. It's, what they're saying here, around 4, a little over 4. The other thing is that I just don't think the Australian economy can handle 4%, because look at what it does to mortgage holders.
Oh, look what's happening now. What's it like? It's 2.6 now. Like, it's a long way to go to 4.
But it's just that because there's so much household debt, that it would absolutely crater the housing market, which don't care really if it does. It just means lower house prices for everybody else. But people with variable rate mortgages, like even on a $500,000 mortgage, I think I saw yesterday, if you have a variable rate above 7, you're talking about an extra $1,200 or $1,300 a month for someone with a $500,000 mortgage. Now, if you live in Sydney, your average mortgage is a lot higher than that. So it's a huge increase, and that's why, I just don't think they can get there. I'm skeptical they'll get to 4% myself.
Yeah. Well, if you go back and look at the past, I was skeptical they're going to get to 2.5. So, so I'm being a little bit wrong here. But when you look at 4, what's the mortgage rate's going to be? They're going to be
Yeah,
7, 8, well, higher. I don't know. What are they going to?
yeah, 7.5, 8, maybe. Yeah. So
Wow,
that's
that's in.
pain.
Yeah, there's no way
Yeah.
they're going to get there. Like, there's going to be that pivot, but you know, inflation. What do you think? They got to be happy with a four handle. Surely, there's no way that they could be happy with a two handle. They've got to be happy with a four.
Yeah, and they'll have to extend their view on how quickly it's going to come down. I mean, I don't know about you. I just can't see them. Oh, we made a mistake. We're going to go 50 next meeting. No, they're not. Yeah, it's just going to break everything. So
But no, I still
yeah,
think there's a possibility they could do that. Like they could go, wow, we've really got to, jump on this. And, they wouldn't
right.
have to do as many hikes later on. And it'll give them room
Yeah,
to cut. If you had the balls to do it, you would be doing 50. If you weren't, I would be doing 50 and then going, well, look, you're supposed to be going out to 4 here. So, get it above 3 and then you
yeah.
could slow it down a little bit, I don't
Well,
know.
do you think they've got some, I don't know, buyer's remorse? Because I mean, do you think they're all going, oh no, we should have went 50 last time? Yeah.
Yeah.
They adopted this new, as we said in the last one, or the one last time we talked about it, was this new language about wanting to give consumers and households the impression that we're serious, like that we're going to keep this is it's going to be a sustained attempt to bring inflation down. Wow, shit. Yeah.
Well,
I mean,
serious is do
25.
50. Yeah, do 50 if
Yeah.
you're serious. Like, don't cut it, which makes everyone rally. Oh, it just drives you
Yeah.
insane.
Oh, well, yeah, I mean, because like I've said to you offline, I don't think they would because they've got to retain some credibility. But I mean, when you've basically got no credibility, there's not much to retain. So you might as well do 50. Uh,
Yep.
yeah. All
Oh.
right. Well, that's enough making fun of the RBA, as is our custom. So earnings have been interesting this week. You had who've you had? You had Microsoft, Google, and Meta, Facebook. Did Amazon report?
They're today. Amazon will be
That's
today or tomorrow. Yeah.
tonight, right?
Yep.
Our time. Okay, so this is kind of the last leg of the stool for me because people are like, what have we have now? There's no Tina because you do have alternatives to stocks.
Mhm.
Um, the speculation has gone away. A lot of the speculation has gone away. Um, and so the last leg of the stool is really earnings, and earnings are priced in to be something like $235 for the S&P 500 next year. So at current prices, that looks reasonable. Like I don't know, 16 PE or something.
Mhm.
Um, but my view is that there's going to be downgrades. There's going to be all kinds of revisions. You've seen on the back of Microsoft's result, which wasn't bad, by the way. It's just that their Azure, which is basically their cloud service, which is 40% of their revenue, grew at 35% instead of 40. Not terrible.
Yeah.
And they guided and said, look, it's probably going to go next quarter. It's probably the growth year over year is going to be about 30. It's going to lose another 5 percentage points. And they guided to revenue of between 52.5, 53.5 billion. The street's expecting 56. So it's just less than people thought. And that this is just, I don't think this is a Microsoft only story.
Mhm.
It's just a slowdown. There's a slowdown in their growth in their, what do you call them? What do they call their PCs? Surface
Oh,
laptops and all this sort of
yeah, yeah.
stuff. Yeah. So there's a slowdown there as well. Now, two brokers who had price targets of over $300 have cut their targets to, I think, 275 and 280 respectively.
Mhm.
Brokers are always late at turning points. They're always late. So that was Microsoft. Meta came out last night. Their earnings were less than half what they were in the same quarter a year ago. Just a shocker. I think their share price is back to where it was 6 years ago now. Did you have anything to say about Google? You saw Google, didn't you?
Well, Google's more um, ad
Ad
based.
based.
So
Yeah.
that's going to be the canary in the coal mine. Like if you see people pulling ad budget, which is what Google's saying, like, but it's only down 30% from the highs, Google. So I don't think the market's fully pricing it in yet. I think there's probably, it's under $100 a share now. So, but I still think there's a little bit more room there, especially when they see other people guiding down. That may come back and hurt Google a little bit more. But I see Google, but they keep upping the prices on everything. They're making me pay for email, and they can take back revenue share off Google, YouTube people. There's heaps of things they can do, little levers they can pull here to, Google Maps. That's all free. What there's no ads or anything in that. So there's heaps of little levers they can pull here to add revenue. It's going to get a little bit messy, I think. We'll see what happens.
So I think earnings is the last leg of the stool. I'm not saying earnings have to fall off a cliff, but it's just the expectations embedded are overdone. And again, what should these companies trade on? Everybody agrees they were overdone last year, but what should they trade on? Maybe over 20 times for Microsoft in an environment where you've got high inflation, you've got decent bond yields. Maybe 20 something times is too much. Maybe, well, I've said this before, maybe we go back to where a 15 PE is appropriate. I don't know. And in that case, it could fall a lot more.
The thing is trying to pick this.
Of course. The timing is always a problem. This was interesting. This came out. This is Jesse Felder's free newsletter that he puts out. Anyone can subscribe to it. So he's got here the big five: MANTA, Microsoft, Apple, Tesla, Amazon,
Nvidia,
and Nvidia. And so you can see their Fed balance sheet tracks pretty well. Of course, the dubious part here is that it's going to take that downward trajectory, which I think you and
the Fed's going to decrease. You think the Fed's going to decrease from 9 to 5? Come on,
it's
really?
hard. It's hard to see, isn't it? It's very hard to see. I very dubious about that, but I thought it was interesting. I think he said something about that if you aggregate all of those five, their price to free cash flow is 50 times.
Wow.
Right? Across all of them. So, that's the thing. And so someone else reminded me of this the other day. The stocks that led, we often look at these because they led the bull market. But the ones that led the previous bull market usually don't lead the next one. It's usually a churn rotation, sector rotation, So, I don't know.
What's your prediction into what? Energy?
Oh, I don't know.
Value?
Well,
I don't know. What do you sort of think?
Yeah, value and energy. Value is doing well. I think there's just a reappraisal, that what we talked about before, that structural reappraisal of the market. You can't just buy anything and it goes up.
You've
got to actually look for value. People will be interested in a renewed interest in cash flow and profits, and which is weird because that you'd think that's anyone buying on fundamentals should appreciate cash flow.
One of Burry's tweets come out saying, people aren't looking at free cash flow still. I'm like, come on, guys! Like, surely this is going to come back in vogue. After it will. Probably going to take a crash until it happens, but
a lot of pain. And this is from John Hussman. I think is interesting. He's saying, I'm not saying earnings need to drop 30%, though even that would only bring margins to the elevated norm they've enjoyed since 2000. So and his chart here, he's got gap earnings and operating earnings trailing 12 months, right? And then the green line is 8.5% of S&P trailing earnings. Now, why do you pick 8.5%? That's the median of profit margins since 2000, which are elevated. That's elevated from history. There's an argument that says profit margins these days are higher because of these asset-light technology internet
Yep.
companies that have better returns and therefore higher margins. Like that's
Mhm.
the argument. So he's not arguing for a fallback to margins pre-internet. He's just arguing for a fallback to margins since 2000. So for the last 20 years, essentially. And that's where the green line is, right?
Yep. Oh,
So
okay.
yeah. So if you think, that, as we've said
Mhm.
before, pricing power runs out because, okay, companies have been able to raise prices because the demand is there. What happens when demand is curtailed, which is what the Fed is intent on doing? Can you continue to raise prices? Probably not.
Yep.
I think, like I said, I think we're going to see some great specials on PCs this year. Yeah, so I think that's just an interesting one. That's another sort of blow to the earnings. Are the earnings going to hold up? It's just hard to see. It's hard to see that they hold up.
So
Uh,
there could be a 15% correction here. Like the 30
mm,
seems a bit extreme. Like because all
yeah,
the top mega caps are all asset light, besides
yeah,
Tesla.
yeah,
Yeah. So I don't know. So we've had 30% correction already, in the S&P 500. I know that hasn't affected earnings yet, but um,
yeah,
yeah, I don't know. We've got a little way to go, I think. Just
yeah.
need a
Just a little.
catalyst. We need a catalyst, that's all. So
Yeah, yeah. All right. So let's get into the talking about unicorns. First, let's just remind people who are watching what is a unicorn?
it's just a company that's valued at $1 billion pre-IPO is the normal
Mm.
definition. I think they've got other unicorns, black unicorns, is 10 billion or something dollars. But
Right. Yeah.
yeah, that's the general look at it. And I just thought, oh, wow, what an interesting graph. But it just reminded me of this book called How to Lie with Stats. Like, because
Right.
you're just looking at this graph thinking, oh, look how great the US is doing compared to China. And
Mm.
you're thinking, look at some of these smaller countries here, and that's what I was, oh, and I was more interested in Australia. Like, how are
Yep.
we doing on the world stage? Um,
We don't even rate.
we don't, yeah, like, but you see Israel and, Singapore, even South
Yep.
Korea, they're all doing fairly well. Um, but we're not even on the list. And yeah, so I did a new chart. This is the next slide.
Yep.
Um, where I put everybody in per million of population. So that tells you
Uh-huh.
how well each country is basically doing on not a per capita, but a per million.
What's the deal with Israel? Why are they just sort of super innovative, or what's the story?
Well, Israel's a sort of a conflict zone, and they can
Mm.
adapt. Um, and they've got a culture of, handling change, I guess,
Yep.
and not less,
Yep.
resting on their laurels. And you look at the next one as well, Singapore. Like, it
Yep.
was a freaking swamp 50 years ago, like a hellhole, like there's nothing there. And now
Yep.
you look at it, nearly 4 people out of every million people, are started, billion-dollar companies.
Yeah.
And then it starts to get down to the bottom of the list here, and you look at Australia, and we're equal to a third world country here. And we
Yeah.
spend billions on education, but entrepreneurs are basically hated in Australia. Like the way things are set up, and do we encourage them? Obviously, you can look at the results.
Mm.
And
Yeah.
I'd be, more interested in Brazil, China, and India. Um, they've got a lot more chances of catching up here and taking ahead of
Yep.
us because they're
Yep.
not
Yeah.
developed yet. We've got all the education, electricity,
Mm. Well, it should be
right.
said that our electricity, our educational rankings have just been going backwards, I think, for at least the last 5 years. Um,
And we need out of the box type thinking as well. Not like, just cookie cutter, creating people for factories. You need people who can think, critically about solving problems for the world. We've only got, 25 million people. So,
yeah.
and I'm just a bit worried, we rely on mining so much, if that boom finally does end, um, what's next coming for us? Like what are we going to
Yeah.
offer the
Well,
world?
this has been the perennial problem. I mean, of Australia really is that we never really do. I mean, how many times have you heard successive governments say things like Australia's going to be a technology hub, a
Mhm.
technology innovation. We're going to have smart cities, all this sort of. It's like, yeah, where is it?
Yep.
Where is it?
Mm.
It's nowhere to be seen. I mean, there are people. I mean, like take like someone like Steve Baxter, who invests a lot of time
Yep.
and his own money in backing entrepreneurs. He's out there, sort of. He was had a hand in that uh, innovation hub that was built in Brisbane, right?
Mhm.
Um,
Yep.
yeah, South Bank, is it? Something like that.
Yeah. Yeah.
Yeah, I don't know how it's going. I mean, I'm not
River
sure, but
Labs was that?
River Labs, yeah, is it? Yeah, okay, yeah. But yeah, I mean, there are people out there trying to push that, but
Right.
probably they're not getting much assistance, are they? They're not
No.
exactly.
Yeah.
And there is a real. I mean, if you go on Twitter, which I recommend you don't, but there is a real. Um, right now, there's a huge chorus about how come we don't taxing the resource companies that are making so much money, and
Mhm.
the resentment
Yeah.
is huge in this country, that like the people that are successful and make a lot of money. I mean, look at this silly thing about Gina Reinhardt sponsoring the netball team. Oh, they don't want to sponsor because something her father said 40 years ago, and meanwhile she's been funding
Oh.
programs for Aboriginal communities in the tens of millions of dollars. You'd think that that was enough of a repudiation of her father's comments, but no, it's not good enough.
Yeah.
She's a horrible billionaire that needs to be taxed into infinity.
Mhm.
No, it's crazy.
Yep. And yeah, I just don't see an end in sight to this sort of thinking, and the
Where
free
should we
lunch
move?
may end. I don't know.
Where
Like
should?
Singapore looks good. It's just $2.5 million
Yeah,
to become, as you can see, like they're really kicking goals there. Um,
yeah,
and even though increasing their taxation, but I just think, you know, people just want a free lunch, and there's no other. Someone's got to pay for this at the end of the day, and they all expect somebody else to, but it ends up
yeah.
being everybody. Like there's no free lunch, I'm afraid. So, yeah.
It's a difficult one to get
Mhm.
through to people, that there is no free lunch. So you be Doctor Doom has been out there.
Yep.
I mean, this guy has a talent for being able to cram every possible worst case scenario into, a paragraph, hasn't he? He can just. Yeah, I remember during the whole Lehman meltdown and everything, is that he would just have these diatribes. He's talking about all the banks are going to collapse, blah 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 blah. So, what do you think that his popularity is back again? I mean, this guy was a rock star. He was going
Yeah.
to like dinner parties and things in 2008. He
Mhm.
it was sort of unheard of. He's like a rock star economist. So, what do you make of this new renewed interest in Roubini
Well, I
popping up
keep
everywhere?
putting up things to tell me I should be buying, you know.
Right,
And when
Roubini, the
the
contrary indicator.
yeah, and I think someone should make an ETF, or an indicator about it. As you can
Yeah,
see, all these times when it starts getting above around that 70s mark here on Google search trends, you
yeah,
basically should be buying. Just because everything's always overblown. Um,
yeah,
I am still a
yeah.
little bit salty because he's one of the main people who said about the double dip after the GFC,
Right.
and I sort of bought into that sort of crowd when really I should have been an allocator, picked my value,
Yeah,
and gone, well,
yeah,
it's in my price range now. And but I sort of followed a little bit too much of this sort of talk, and I paid the price.
yeah.
Um,
Yeah, and as we've said before, at the bottom of markets, the bear case always sounds the most realistic and sane, because everything is going to shit. And so
yes,
if people just come out and go, it's going to continue to be shit, then that seems the most plausible route to take, but it's usually not.
yeah,
Um,
yeah.
yeah, look at.
So I don't know. Like I'm just saying, people should be thinking about allocating, and I don't know. This guy, all he says is, get into tips, short-term bills, and
Right.
gold. And I'm like, wow, like, is that your advice?
It's a
Uh,
tough call.
yeah, I don't know.
Gold.
Yeah.
All right. Stock of the week. Brought to you by Tim. Tencent. Geez, PE has gone from 40 to 9. What's been going on here, Tim?
Well, supposedly people have worked out there's communists in China. That's what it seems to be like. And, communists doing communist things, but it's still the second biggest economy in the world. And Tencent is one of those compounders that owns WeChat, which is central to basically everything in China. And so I think people are killing this a little bit too much. Like you see, price of free cash flow is just insane, under 10 for a technology company. And you see the margins and the return on invested capitals and well in the teens to high teens. People should be looking back at China, but
what have their earnings been doing recently? Have they slowed, gone backwards?
The free cash flow here is basically on par for the last couple of years. It's just growing. You see, it's sort of stagnated last year, but the year before that, 25 and 30% increases year over year. So that's a huge amount of cash flow coming in. So at some stage here, we're going to get a turn, and these things will be fashionable again, but I'm not sure when.
Yeah. So are you allocating to this, Tim, yet? Have you pulled the trigger? You're still waiting for your 40 VIX or not?
Well, the VIX is getting a little bit high. All these mega caps are sort of correcting a bit. I saw, 9% and was it 6 or 7 from Google and Microsoft overnight?
Yeah, Microsoft. Yeah, I think Meta was down a lot more than that. I think it was it 18%? I saw something like that.
It's already low already, so that must be a huge correction.
Yeah.
Those mega caps moving, they'll move the VIX a fair bit, especially if they rally again. But yeah, I've already sort of invested in Process, so which is like a South African company who basically purchased Tencent many, many years ago. They own 30% of the company, and it's gone up and been a multiple bag for them, and they've just sold a little bit of it. So they own about 30% or 29% of Tencent.
Right.
So I own through this vehicle in the Netherlands called Process. So I only own a really small amount, but I'm thinking of adding it to it because I can't find any other compounders in China.
Yeah.
But you're thinking at these prices, if we get a crash of, 20% from here, this is going to go to a PE of 6 or some crap. This is insane. So I don't know. I'm still holding off allocating. So what do you think? You think you're going to rotate into China at any time soon, or is it still hated?
Yeah, I just keep reading too much negative news about China. And did you see there's a report out recently about how China has come to the conclusion that they've been overcounting their population, and actually that their population has been in decline for the last 15 years, rather than peaking sort of around now. But they actually peaked 15 years ago.
Wow.
And so they're already made it. They're in, the same situation. Japan started, I think it was around 2010 or so, that they actually started to go negative in terms of population growth. And so China's been, I don't know the truth of that story, but it's a lot of people talking about it. And I just, the demographics there look pretty awful.
I see the hiding a whole heap of stats as well. They're not releasing stats.
Yeah.
So, but how much did you believe them to start off with? Not publishing them might be an actual benefit because then people will use real indicators. But
but this was always the case. I mean, I remember I was listening to a podcast a couple of years ago about everyone thought Russia was going to take over the world in the 50s. I mean, Russia was growing really fast in the 50s and 60s and catching up to the United States, and it was all a house of cards really, and that this was no different. That China was going to grow, and then it was going to, the demographic peak was going to come, and that was it. And they haven't really transition to a consumer-based, high intellectual property sort of country, as everybody said they would. So yeah, I don't know. I mean, that's not a reason to not buy Tencent at 9 times earnings, but yeah, I'm looking elsewhere. I actually today, maybe we'll talk about it next week. Are you familiar with the Equitize platform
No.
in Australia? So it enables small investors, so you don't have to be sophisticated, to invest in pre-IPO companies, private companies. So I invested in one of these companies in 2019. It's a internet. It's a telco, basically,
Okay.
targeting small medium enterprises. So I think they had $400,000 in revenue in 2019. They just clocked up 2.5 mil for 2022. They're profitable. They made $500,000, and they've just had a second round. So they in 2019 they issued stock at 50 cents. This time around they're issuing it at $1.16.
Wow.
And then they're aiming to IPO within about 18 months. And so, like I said, 2022 they did 2.5 mil in revenue, and they reckon they're going to do 5.5 this year, 2023. So I put some more money into that. Not much, just because I don't want it to be like a large position. It's still unlisted. It's unlisted. But they've executed really well, particularly during COVID. They've managed that growth through COVID. They got 99% retention of their client base. So yeah, maybe you'll talk about that one. So I've allocated to that one. It's a good platform.
Is there a secondary
Sorry?
market? Like, is it still liquid? Like you can on sell to others?
Not that I'm aware of.
Okay.
Again, this is something that I just thought, yeah, they were supposed to IPO, I think, this year, but COVID just threw a spanner in all that. But yeah, that was my view, is to hold to IPO. See, if they come to market in 18 months with a share price of $1.50, I'm already well up, something like that. We'll wait and see. But yeah, that Equitize platform is worth having a look at. So it's a lot of small companies looking for money to expand. Most of the companies don't do anything for me. There's like this avalanche of brewing companies that are brewing their own beer, and I just like, God, how many more of those can be funded by private money? So I stuck to something boring, and sort of telcos used to be exciting 20 years ago, but they're kind of boring now. I mean, these guys are kicking goals and making money, bottom line profits.
And cash flow.
Before cash flow. They're operating cash flow positive. Yeah. So that's what I've done recently.
Nice.
I'm got to be honest. I'm happy about Microsoft's news of slowing revenue growth, because it's getting re-rated by the analysts now, and the market's re-rating it, and so maybe I will get a chance to buy it at under $200. Who knows? That would be nice.
It's looking
it's
like
back down to it's back down to 230. So yeah, I'm not 10 cent China. Yeah, I know, a little bit out there for me on the risk curve. Too conservative.
Yeah. Well, like they say, a small allocation, but like at some stage they still say China is going to overtake the US. But yeah, there's a lot of people in China. So
yeah, well, sheer numbers of people. But wouldn't you say that longer term, India looks like it probably could be the biggest economy in the world?
I just can't. It's very hard to invest in India. Like, Interactive brokers don't really allow me. So, if people want to invest, I think Terry Smith's EM type fund is the one to go for. So if anybody wants to get exposure to India, so that's sort of idiot proof, and you're not buying some dumb ETF that's buying all industrials, all sorts of stuff that's that's going to not going to go anywhere. So I don't know. If I find something in India, I'll be very interested. It's just very hard work.
Yeah.
Yeah.
All right, let's wrap it up there. Thanks everybody for listening. We have been the Salty Investors, and we'll see you next time.